Hello guys, it's Dale here. Before we go into today's analysis, I'd like to mention one thing, and the thing is a special Halloween sale that we are running on the order flow pack and the elite pack. The order flow pack is available in here. If you click order flow here in the menu, then there's a video which explains everything that you can get with the order flow pack. The order flow is ideal for intraday traders, and the pack includes the order flow software, 12-hour video course on trading with the order flow, and volume profile indicator. You can get it in here, as I was saying, if you click the order flow in the menu. The other pack is called the elite pack, and you can get it if you click this trading course and tools button and scroll down a bit, and this is it. This is the elite pack, and the elite pack focuses on training to trade with a volume profile indicator, which is ideal trading tool for intraday trading, but also for swing trading and planning your long-term investments. There's a video which you can watch. The video will show you everything that's included in the elite pack. In short, there's a video course on the volume profile trading, my personal trading levels, volume profile indicators, and a couple of bonuses. At the top of that, both for the elite pack and the order flow pack, there is a free tech support, which means that our support will install the NinjaTrader 8 platform for you with all indicators, workspaces, connect you to data feed, and they'll do it for free, right? So that's the special sale we are currently running. And let me now switch over to the charts and do the trade analysis. So what you see before you now is a New Zealand dollar Swiss franc, and you're looking at weekly chart, which means that each candle is 1 week. This is a long-term analysis. It is not an intraday trading analysis, which I usually do. This is a long-term analysis, and what I want to talk about is a long-term resistance in here at 0.59. As you can see, the New Zealand dollar Swiss franc has been dropping for the last couple of months, and there was a strong downtrend formed. When there's a downtrend, and it doesn't matter if it's a weekly chart, a daily chart, or a 30-minute chart, or a 5-minute chart, when there's a downtrend, I use my flexible volume profile over that area, over that trend area, and I look for significant volume zones. The most significant volume zone in here, in this downtrend, is definitely this one, right? And this represents a place where sellers who are pushing the price downwards were most likely adding to their shorts before continuing to push the price downwards, right? So this is a super important place for the sellers, and I think that those sellers will want to defend this heavy volume zone. So when there is a pullback to the beginning of that heavy volume zone, I expect that the sellers will become active. They'll want to defend this important zone where they placed a lot of their shorts, and they'll want to push the price downwards from there again. Right? Now, because this is a weekly chart and a long-term trade, you need to use a wider stop loss. In this case, I recommend having the stop loss behind this heavy volume zone and above this swing point. So, in here, this would be the stop loss, right? You always want to place stop loss behind heavy volume area, and also ideally above swing point like this. So this would be the ideal place for stop loss. It's nearly 200 pips, and you also need to set the take profit accordingly to that. So at least risk reward ratio 1, which would mean somewhere in here. Later on, as the price retraces back to this short level, you can adjust the take profit, and you can base it on volumes. You can learn how to do this in my book, which is freely available on my website or in one of my trading courses. But right now, you can set the take profit like this and trade it at least with a risk reward ratio 1. Alright, so that's the plan for the New Zealand dollar Swiss franc. Apart from this volume cluster and the volume profile setup, which is called the trend setup, there's also one more setup which confirms this trading level and adds strength to it. And the thing is that if you look in here and also in here, the price was reacting to this level in the past, right? This means that it worked as a support in here and also in here. What happened next was that the price blew past that support, which means that the support turned into a resistance. Right? This support turned into a resistance. And this is what adds strength to our level, because not only we have this volume cluster, but also support becoming resistance, which is a price action setup. And this is also the reason why the level is in here, why it's not a bit higher, because as you can see, the heavy volume zone really begins somewhere in here. And I placed the level a little bit below this. And the reason is that this is the place where the price was reacting in the past. So what could happen is that the price could retrace and react to this level and not even make it to the beginning of that heavy volume zone. If this would happen and you would have your limit order here, it would be a missed opportunity, it would be a missed trade, and you would need to discard the level. But if you place the level a little bit lower, then chances are you won't miss the trade entry. Alright? So that's why I have it in here. So yeah, that's about that. That's about the New Zealand dollar Swiss franc and the long-term analysis with the weekly chart. I hope you guys liked it, and I'll be looking forward to seeing you next time in some next video or in our members area. And until then, happy trading!